Hello, everybody. Jim Malone here, coming to you live on Dallas Trading Floor. It is Monday, the March 8th, and the market is kind of schizophrenic, actually. Some stocks are doing great, and other stocks not so much. The techs are selling off, and so that's Tesla has been, taking a dive. So just want to get into the slides here real quick for everybody. Here we go. Now, hopefully, I've got a bandwidth issue. There we go. There we go. All right. So basically, we're in a correction. We're down about 2% today on the NASDAQ. Now, most of the pain has been in the NASDAQ. The Dow Jones is doing good. It's up 1.34%. This is part of the movement from tech, out of tech, into some of the more cyclical stocks. Oil and gas is a big area that's been seeing some of that movement, and also some leisure products. And I have a bill call spread today for everybody that's on the action trailer. It's super easy to get on, and of course, it's www.Dallas Trading Floor. Just sign up; it's totally free. But Tesla's selling off, and so all the other techs are selling off. We have a movement from some of the techs into some of the more cyclical names. So I just kind of wanted to give you a look-see at Tesla. Wow, it's off $28 today, about 4.7% when this was taken. The composite rating is falling, and it looks as if it has crashed through that very critical $600 level. Now, I am still a Tesla bear. I'm still a Tesla bull. But I'm basically waiting until we see some strength. The pivot, the original pivot, which this run was on, was at 502. So we may see some strength there. Who knows? But the volume is up and the price is down. That is essentially, a lot of people are selling and moving to something that's a little bit less extended. So, but there may be another opportunity. This is actually, if you've been watching me for any time, I basically was, kind of sounding the Tesla selling alarm at about 720, 760. We've moved down significantly since then, but Tesla may give us another bite at the apple, and wouldn't that be great? Because there's some serious potential to make money in Tesla, but right now you don't want to be in it. It's pulling back hard, shaking everybody out, and it's not very much fun when you're on the losing side of that. Always remember, set that stop loss and try never to take more than 7% loss on the downside, because you can always buy a stock back. The most important thing is to control your losses, and that's a big key. Talking about that, controlling your losses, this is a very interesting chart that I've put up here. It's bulls versus bears, and if you're watching on YouTube or on Facebook, you can see this chart. Basically, what it says is that right now, the bulls are 53.9%, the bears are 18.6%. That's down a little bit from over 60% just a few weeks ago. So we're starting to see the reversal. This signals the bottom of a market, and we're not anywhere near that based on this. So we have the bulls basically still above 50, and they need to be basically below about 40 bulls, and then it probably will turn. But right now, we are seeing the sentiment change a little bit from extremely bullish to very bullish. And by the way, we are in a correction, so be very careful with any new purchases. You want to define your risk. You want to be very careful because we're coming into a situation that may be less easy to make money than before. So basically, just give you an idea of what I'm in currently. I did buy a stock today, and then it promptly retreated on me. But basically, I'm in Ford. It's up, of course. Halliburton, we're up on that. Rent-A-Center, up on that. Granite Construction, and then I did enter a position in Vale, which is a South American mining company, today, and it did retreat a little bit. So hopefully that'll hold up. I've got my stop losses in very tight on this. It's only a 5% stop loss on Vale. So if it doesn't perform, it's going to be out the door. I also shorted Lululemon Athletica, which was an extreme high flyer. It's pulled back a little bit. I shorted at about 300, and So it's pulled back to about 288. I suspect I will probably pull out of the short when it reaches about 260, if that is the case. So that's kind of the situation here. So without further ado, let's get to some of the questions. Thanks for I hope everyone had a really nice weekend. I certainly did. And it's warming up nicely here in Dallas. So let's take a look. Jim, how are you doing? I'm actually doing very well. Very well, thank you. The weather's warming up here, and the snow is all melted. Believe it or not, we had a lot of snow here in Dallas, and it's looking pretty nice. So doing great. Thank you for asking. I really appreciate that. All right. What do you think about the shift to the e-commerce industry? Any top recommendations? Well, here's the thing. I do think that, e-commerce, of course, is a big area, but I think that right now the shift is to what more real economy type stocks. And these are stocks basically that, and I want to show you this because this is a good indicator of it. So let me pull the sector list up. Get into quick, hopefully. Yeah, there we go. Okay. Pull that up. All right. And to get a little bit of slowness on the internet connection again. Gosh, I'm amazed that that's the case because this building has very good internet connection. You would think it would be better than that. But anyways, let's take a look at some of the sectors in the economy right now and kind of see what's up, what's down. And that's the thing, when we have a rotation, we want to look at basically which sectors are doing better and which sectors are declining. And that's key, because that's going to show us where the money is flowing. So let's go to the industry groups. I'm gonna put the big screen up here. Hold on, there we go. And I'm going to give you an idea of sort of where the money is going in the economy. And this is a very important thing to look at, because this is going to tell us. There we go. Hopefully we can get that sorted. Oh, good. There. Okay. Yeah, it looks like it. Did it sort it? Sometimes I have an issue with this sorting, and I'm trying to get it to sort from top to bottom. Well, heck, there we go. No? Okay, there we go. The groups. Let's go to the groups. Sorry, it took a second there. All right, so as you can see with this, let's see. All right, is this one? Yeah. There we go. Okay. There we go. All right, so now taking a look at these groups, you can see the top group right now, believe it or not, is not a tech group. It's actually wholesale retail. I don't have any things in there, fossils in there, but look at the number two group, and this is very interesting. It's oil and gas, and then you have oil and gas drilling, retail department stores. They were very beaten down, of course. Oil and gas royalty trust, oil and gas, so everything, and then mining. And then oil and gas field services. So we have a very, very strong movement away from some of the tech stocks right now into some of the oil and gas stocks. And I really want to show you this. Let's take a look at some of the drillers, because that's going to kind of tell the tale here. Oops. Let's see if we can get that up. Here we go. Oops. And that's going to be the drillers. Oops. Still didn't want to do it for me. All right, so hopefully we can get back to the drillers here. We just fool around with the doing everything you can. All right, there we go. All right, so all right, so this is the number 2 area right now, is oil and gas drilling. And so I want to show you the stocks that are actually in this group. And this is kind of where sort of where the market is moving. EOG, Pioneer, Devon, Diamondback, Cabot. these are all stocks we want to start possibly looking at, because these are ones. This is where they are making the movement to. This is where these stocks are moving to. Yeah. Oops. There we go. Okay, there we go. So this is where they're moving to. So I wouldn't be as interested right now in terms of the retail. I don't think the e-commerce. I think e-commerce is great, but I think that, in order for a stock to double, you've got to have a stock in an area that where the capital is moving. This is one of the reasons why Tesla was so spectacular last year, and it may be again. We've got to find where there's movement in the market, and right now there's a lot of movement to oil and gas. Interestingly enough, here, for instance, is oil and gas drilling, and that gives us. There is a company called Transocean. I brought that up on the screen, and it's a relatively inexpensive stock, but yet it's got a very good base. It's just right over 4. So that's what I'm going to be trying to concentrate more on in the near future as we move from kind of the tech stocks into more on the oil and gas and that kind of stuff. The reason that there's this change is because if the interest rates go up just slightly, many of the tech stocks, which have no earnings, typically do poorly, and many of the money managers will then move out of those tech stocks, sell them, and then move that capital to another area. And right now, the oil and gas area just seems to be being invested in. As you know, the price of oil and gas, the price of oil, West Texas Intermediate, is going above 70, and that's a very key range. When oil and gas, West Texas Intermediate, gets above about 65, that's when the investment starts to pile in. So at least for right now, we're looking at investment in their area. So I wouldn't be looking any of the top recommendations in e-commerce. I know that e-commerce is the thing, and it's been the thing, but I think right now, we've got to look at other options that might be better, like oil and gas, exploration, also, and some of the other ones. A kind of a stock that I would like to bring to your attention is FANG, FANG. It's not the FANG stocks. It's basically Diamondback Energy, and its industry rank right now is 2 out of 197. So it's very, very strong in terms of its industry rank. Also, it has it has a relative strength of 92, and I do believe it's pulled back a little bit today, and we can see that by the chart here. But in general, this area is being invested in. So capital is moving into the oil and gas area from tech right now, and that's kind of where I'm looking. And also in leisure. Leisure is also an area that's moving into. So that's the kind of area. That's where I want to kind of concentrate in terms of looking for things. So, okay. Question from Ferris: holders sell the SQQQ. Well, I still think it's probably good still, because I do see movement out of the queues still, but I do think it's coming to. I think it's coming close to its end. It's up $1.16 today. It's at $16.20, so it's doing quite well. I would start to try to back off on this a little bit, because I do think that we are probably going to see a settling in some of these accounts. I mean, we're going to see the Qs down. Let's take a look at the QQQ to just kind of gauge this. It's funny that the way you basically look to see when it's time to sell the SQQQ is you look at the QQQ, which of course this is the opposite to. See, it's getting a little bit. It seems as if the Qs are getting a little bit of support right about the 300 line, and you can see that's definitely true, because there was a cup and handle here, and there's support at about 297. Currently, it's about 300. So it's going to probably adjust. It's probably going to possibly take a rest there, I believe, before it continues down. So I would be kind of looking, at least for today, I would look possibly, depending on how the Qs do. If they trade, if they close below 300, I think you want to keep the SQQQ hedge on. But if it closes above 300, I think you might want to consider selling it. And this, remember, the one to look at here, Harris, is the QQQ. So if the QQQ is above 300, I think you could very easily, very easily close your position, because I think we might be in a reversal. But if it's below that, and I do kind of expect it might be, then I think you want to continue with your hedge, with your SQQQ. So because the SQQQ is totally inverse to the QQQ. That's how it works, and that's how it lines out. Okay, so what's going on with AI and you? Okay, let's look at AI. Let's see if I can sort of make that a little smaller there. Yeah, there we go. So it's a little bit easier to deal with. Let's look at AI. All right. Let's go over to AI chart. Just give us an idea. Yeah, it's just like, unfortunately, it's just like almost all the growth stocks. We're definitely seeing a lot of we're seeing a lot of change here, because again, some of a lot of the mojo is going out of the mojo is going out of the tech stocks into more of the traditional kind of cyclical stocks, such as mining and oil and gas and boring stuff like that. So right now, I had a position in C3 AI. I did close it because I just couldn't, when it started going back down, and this is one of the reasons why I always am very careful with this. I always like to close the positions if early, because you never know how far they're going to go down. So this is one of the reasons I use the 7% rule. If I buy it and I'm wrong, and I'm wrong a lot actually, then as it pulls back, if it pulls back more than 7%, I'm out, because even though there may be sometimes we'll turn around, I just don't think that long term it's the way to go, especially when there's a changing market. Now, here's the thing that you got to understand: computer software right now is 113 out of 197 in terms of the groups. So there's a definite disinvestment in this sector right now. There's money moving out of the NASDAQ 100 into both the Dow Jones and then some of the other more cyclical stocks, the financials and the oils. So that's kind of where you want to be as well. Now let's take it. That's a game. So a company that makes game software that they make. They create games with Unity. And again, as you can see, the same thing with Unity. It's broken below the very critical 50-day line. So this line here, this red line here, when it goes below that, it's kind of a wake-up call. You want to be careful. It looks as if we're below the 10-day line, the 21-day line, and the and the 50-day line. So this is not the kind of chart that you want to see. This is the weekly chart here. Same situation. So don't round trip your money with this one. If you're down more than 7% on this one, it's a good time to possibly close the position. It really is. All right, Christian. How do you confirm a reversal? Is it a certain percent needed from the bottom? Okay, yeah. That's a really good question. A reversal happens basically when it typically pulls below a certain point and then turns around. Let me see if I can find a good reversal for you. Trying to think of a stock that has shown a good reversal lately. Let's look at, let's look at ExxonMobil, XOM, the C. Yeah, okay. All right, this isn't really a true reverse. Yeah, okay. Let me show you kind of what a reversal looks like on a stock. This is ExxonMobil, and when last year the price was coming way down, and it dropped below the, and this is it dropped below the 200-day line. It dropped below the 50-day line, and then it basically was right on the 21-day exponential. Then when it pulled below that, it then reversed higher. So this is a reversal. I'm going to draw a line here, and as you can see, that's the trend line. But when it breaks above that, that is when it moves higher. That is the reversal. So I don't know if this makes sense to you, but what it is it's a break in trend. So you draw the trend line, and then as it moves higher than that, that's where the reversal is. So that is what a reversal basically is. Let's take a question from TikTok. Thank you for holding, everybody. Oops. Okay. Let's see if it'll let me do that. All right. You can watch us on other. Yeah, absolutely. You sure can. By the way, I'm broadcasting live on YouTube at youtube.com/Dallas Trading Floor, and that will show you the charts. I will actually show you the charts. I can't, unfortunately, on TikTok, I can't broadcast the charts live. I can only do that on YouTube. So the best place to go is www.youtube.com/Dallas Trading Floor, all one word, and then you will see the live. Also, if you're also watching on TikTok, it's super easy to move over to there. You can do this by basically going to my profile, and then scroll down on the profile, and you will see a little YouTube box, and it'll be live, and just press that. And that's the top of the YouTube box. There's two boxes. The top one is the live for the YouTube, for the YouTube. So I appreciate that question very much, and we definitely are broadcasting live. I keep hearing the market is positioned to do it amazing once the majority is facts. What's your take? You know what? A lot of this is just hype. I mean, I think that right now we do, if they do pass a stimulus bill, then I think we're going to see quite a bit more of pump into the economy, into the stock market, not the economy, because it's not a real economy. But I think what's happening now is we're going to see, because there's such a high unemployment, and this is something that that the government isn't telling you. There's almost 15 million people that are unemployed right now, and when the country opens up again, a lot of these people are not going to have jobs. Okay, that's why they're pushing so much of the stimulus money in, because they're afraid of this. Certain things are moving up better, such as some of the recreation things, but in general, we have an unemployment problem, and we're going to have an unemployment problem when it reopens. So I don't think the economy is nearly as strong as everybody is putting out to be. That said, the stimulus money, the pump that's going at 20% since the beginning of last year, there is 20% more dollars in circulation than there was. And this money has to go somewhere, and a lot of it's going into the stock market. So I do think with another stimulus bill, and the one that they've passed is a whopper, you will see it go into stocks, but it's not going to probably go into tech stocks as heavy as it did before, I believe. I think it's going to go more into some of the cyclical stocks, the beaten down stocks. This is what they always do. This is a fake out by Wall Street. What they do is they get everybody lured into buying tech stocks that have no earnings, and they're great stocks. Some of these stocks become awesome. But then what they really do is they depress the prices of some of the cyclical stocks, such as the oil stocks. And then whenever nobody's looking, they move the money to those oil stocks. And that's exactly what's happening now. So that's one of the reasons I think that we have to be a little bit careful about, drinking the Kool-Aid too much, too much. All right. So here we go. Let's take the next question. AI, and we did that. Let's see. Okay, that's a reversal. GM. Okay, now this is an interesting stock because I do think with the reopening trade, GM and Ford will be very, very good. And I have been moving into Ford this last month. I've been moving into Ford. I don't have any GM currently, but I think that that this is starting to really move. Now, I would try to buy it above this area here. Now, I say, why would I buy it above? Because basically you always want to buy on strength. So 5650 essentially is an area that if it can move beyond that, then I think that it's going to show even more strength. And it's definitely right now at there. It's at 55. It's up 2.33% today. I think this is a very strong stock, and I think that a lot of people are good, and of course everyone's heard of GM. They have tremendous sales, and they're going to be in the EV business, and they're going to be big in the EV business. I mean, and it looks as if what's her, Barra, the CEO, is making some good moves, and I've been critical in the past, but I think Mary Barra is starting to make some really good moves into EV, and they have a lot of very profitable trucks as well. So I think that at least for right now, it's not a bad place to be. Now, here's the problem with GE. If you're not in it already, the pivot was at 46.71, so it's a little bit extended. What do I mean by that? Well, what I mean by that is that there are optimal places to buy stocks as they consolidate and then push higher, because stocks don't move up in a straight line. What they do is they kind of they come up to a certain point, and then there's resistance, and then when all the weekends sell out, that's when they move higher. And I do think that that's going to happen on General Motors, but it's a relatively slow stock, but it has an extremely good relative strength at 85, and they are profitable. And the thing about GM, it's so large that when they're profitable, they're really profitable. So it could be interesting. 1941 funds in it. The cash flow. Look at this cash flow, by the way. Now we've all been used to looking at essentially stocks that have no cash flow, that have no profits. Well, GM is the flip opposite of that. The return on equity for GM is 17%, which is incredible, and the earnings, are very, very good. So I definitely like, at least at this point, because the market is changing more from a growth orientation to more of a value slash orientation. And right now, General Motors, they have the production. Instead of investing in a company like NIO, which is pulling back, why not invest in a General Motors, which is pulling forward? See, I want to show you the chart of NIO, and there's nothing wrong with NIO. It's just that stocks have their time, and right now NIO is on the way down. So you always want to try to buy a stock as it's moving higher, and obviously sell it before it moves lower. Now, I also think that Ford, I'm in Ford as well. Yep, and hopefully that'll come up here in a second. We're having a little bit of it. There we go. Ford is also moving that way. It's up today 3.18%. Now, of course, it's coming off a very small base. Ford's price currently, right now, is $12.64 a share. It's unfortunately a little bit extended. Again, the buy point on this one was a little bit lower. It was $9.50 on a consolidation base. So it's not an optimal time to buy Ford right now if you're not already in it, but I do think that it may form another base and be good. But that's the kind of thing that you have to look at, because I do believe we are seeing a rotation out of some of the stocks into some of the more cyclical stocks, such as GM and Ford. All right, DHI. Let's look at that for Will. Thanks, Will, for taking a look today. WHR. My internet should be faster. I'm in a building that has T1s, and I don't know why it's not doing well. DH Horton, interesting company. This is the world's largest home builder based in beautiful Fort Worth. Texas, they've had great earnings. They just came off of some killer earnings, up 98%, looking very strong. There is a buy point, and here's the thing: it looks like we're in on a consolidation first stage at 81. So currently we're at 80. So we're just below the buy point on that. Here's what I would do. I don't think that it's time yet for, well, we might be able to buy it as it comes into this range. It's got a relatively low relative strength at 63. I do think that they should do well. There's the thing about DH Horton is that they're in many of the very best markets. So it's a little bit low on the relative strength for me. But here's what I would do on this. 61.21 is the 61.21 is the pivot. And so where you want to probably buy it is at 61.31, which is a buy, which would be on a buy stop limit. So what I'm going to do is I'm going to put this up on the screen here, and if it just works, wowie, still running very, very slow on my internet connection. Apologize. Let's see. Let's buy stop order 4. And then I believe for this is for DH Horton, 61.21 and plus 10 cents or 61.31. So that's where I would be. That's in order to buy DH Horton. I do think this is a good stock because I do think we're moving more into the cyclicals. Autos should do well, and homes should do well. This I would set a buy stop limit order for 61.21. Currently, I'm sorry. Did I get that right? No, 81.21. I apologize. That is wrong. Let me edit that. Yeah, not 61.81. Okay. $81.21. Yeah. So what I would do here with DH Horton, I do think it's in a place where you can buy it, and so that what I would be doing on this one is setting a buy stop limit order for 81.21, and that will give you the right entry point into DH Horton. I just got a text message there. Thank you. So basically what's happening here is we're seeing this rotation out of tech, at least for right now, and into basically the cyclicals. Let's take a look at the spider. This is the S&P 500, and this is the world's largest ETF. It's extremely large. Many people have their entire net worth in there. It is looking like it is trading down a little bit today. Hopefully I can go back over there. Yeah, there we go. And so that's giving us a good look on it. This is the spider, the S&P 5. This is the ETF that tracks the S&P 500. It's very, very large, and it's the volume is up on it. It's down a little bit today. It looks as if, here's the thing: I wouldn't be moving into the spider right now because it is on the 50-day line, and we'll see if it holds on that 50-day line. If it bounces on that 50-day line, it may pull back below that, but right now it seems to be holding that. So the key level on the spider is really about 340. That's where the 200-day line is. What do I mean by that 200-day line? Well, what the 200-day line is it's the average price over the last 200 days, and currently for the spider, and currently that's about 340. So the fact that it's above that 200-day line means that the price is moving up over the last 200 days. but it is starting to lose a little bit of its momentum, because you can see it's crossed below this red line here, and that's the 50-day line. So before the price was accelerating above the 200-day line and above the 50-day line, but now it's pulling back below it looks like potentially below that 50-day line. If it crosses that 50-day line, that means that the spider, or the S&P 500, is declining. And currently the spider has been declining because the overall market has been declining. So right now, with the S&P, I wouldn't be probably a buyer. Now, if you're holding it, that's a different thing. But it's not a good time possibly to buy into the market. It's better to be in cash right now until there is another opportunity. All right. Good question. BP for NEO. Interesting. Well, that's not a bad idea. Let's look at BP. And of course, that's one of the seven sisters, one of the largest oil companies in the world. And it's showing a lot of strength, as you can see. Let's show you the chart on BP. It might be a good time to possibly move to something like one of the consolidated oils. But here's one I would recommend over BP. Now, BP, of course, is a company that is a Dutch company, and it's traded in the United States with the ADR, American Depository Receipt. So it's traded in the U.S., but it's as a market deposit, not the actual shares. Here's one that I kind of think that you might want to look at if you're looking at some of the consolidated oil companies, and it's called SPX. And what it is, PS. I'm sorry. PS, excuse me. This is Phillips 66. I think that this one, in many ways, is superior. Phillips 66, a little bit more expensive at 80. It's up $1 today, about 1%, a little bit over 1% today. So very strong issue if you're looking to possibly sell some of your NEO. Now, I'm not saying that NEO is done with. I mean, we're in a relatively volatile market, but Phillips 66, at least for right now, is probably going to see a nice movement up in the next few months, because the price of oil is going up, and it does have a significant it does have significant upside potential. So that's one of the ones that you might want to possibly put on your watch list. It's not in a perfect place to buy it right now, unfortunately, but it's not a bad idea to start looking at that one. What's some good ETFs to buy right now? You know what? Here's the thing about ARK. I mean, everybody and their brother is in ARK, which is great. But maybe you might want to consider, and this is sort of the anti-ARK, and that would be some of the oil-based funds. This is the USO. This is the United States Oil Fund, and this is one you might want to kind of look at for an ETF. This is an ETF that covers the oil area. It's down a little bit today, about 2%, but I do think that this one has some real potential because of the increasing price of oil. At least in the short term. This is a relatively short-term play. I'm not saying you want to be in this one forever and a day, but right now I do see movement into some of the oils, which I think might not be a bad idea. Now, if you want to take a lot of risk, there is an interesting stock right now that's a driller in the Permian Basin called Ring Energy, REI, that is not a it's not a exchange traded fund. It's not an ETF, but it's moving very nicely. And this is one I was looking at to buy this morning. I did not buy it just based on certain things, but this is Ring Energy. It's a very cheap stock. I mean, I don't normally recommend stocks that are under $10, but this company has been around for a fact, I know this. This stock has been around for almost since the 1950s, definitely since the 1940s. It's been around a long time, and it's been a driller in the Permian for a long time. It has strong cash flow. Interestingly enough, this is a $2 stock, and the cash flow is $1.48. So this has got a tremendous return on equity. It's about 9%. And it's got a growth rate of about 99%. Now, is it going to be are the earnings going to be stable? Well, I don't know, but if the prices of oil start to move up, this is the kind of stuff you want to look at, because these are going to move, and they're going to move very, very fast. This is a real company. It's based in Midland, Texas, and it is on the American Stock Exchange. So this is something that you might want to kind of possibly take a look at. The thing about ARK and ARKG, they're great, but I think that now is probably not the time to buy them while there's a retreat in the price of some of the tech stocks. Now, will this turn around? Probably, because long term everything is going to be tech. Absolutely everything is going to be tech. But for right now, we're moving out of a lot of the techs into other areas, and one of the other areas is the oil and gas areas. So that's kind of what I'm looking at. Let's look at Riot Blockchain. Of course, this kind of trades similar to to some of the Bitcoin. It's pulled back a lot, but it looks like it's pulling back to the 50-day line here. This is the chart on it. Here's the thing I would say about this. I think you got to be very careful entering a position like this right now, even though it does have an excellent checklist at 77%, because of the sector. It's 90 out of 197, which is still good, but it's dropping, and it's dropping fast. So I would be a little bit concerned about this, at least for right now. Right now, my default position is cash. Other than that, if I find opportunities where the money is moving, such to oil and gas or some of the leisure products, that's where I'm positioning myself right now. Just because, and I will be back in the techs when the funds start flowing that way. But right now, at least for the last about 2 to 3 weeks, as I've been warning, there has been movement out of the NASDAQ into some of the other areas. So that's kind of why I'm kind of, are techs safe to buy? Well, you know what? I don't think so right now. I think you got to be real careful buying techs, because there's disinvestment in it, at least for right now. Now, that will possibly change as soon as this next batch of cash comes in from the stimulus, and they're going to pass a whopper, and that's going to go somewhere, and then a lot of it's going to go into tech. But I can tell you this right now, a lot of people are selling their tech. As a matter of fact, I have a short right now on Lululemon. Actually, I'm trying to look to find some of the techs that are good shorting candidates, because I do see movement from the techs into some of the more value plays. I mean, when you can buy, like, for instance, a GM, when you can buy a Ford for like $12 a share, I mean, why would you necessarily want a stock that potentially can lose 30% like some of the techs? So right now, I think you got to be super careful on the techs. It's just, it's funny. It's kind of like Lucy in the football. A lot of people, are going to be, very surprised if they invest in techs, at least until the market turns higher, because it's going to be more difficult to find those opportunities in tech. There always will be opportunities in tech, but the tech sector has moved up very, very fast and very high, and so that's why it's selling off. Here's the reason I say this, and this is really the bellwether to understand the tech sector. The stock that you should look at, of course, is Tesla, because this is the poster boy for the tech sector. And let me show you the chart of Tesla and show you as Tesla goes, so does the NASDAQ go. So we've moved up very, very fast, and then basically, at the end of at the end of the year, in the first few weeks of the year, this was the place to be, and I was in it as well. But as you can see, it's moved over and it's pulled down. Right now, Tesla is selling for $562. It's crashed through 600, and it may crash through 500. Okay, but eventually this will turn, and that will be a good time. But right now, this being a bellwether for the tech sector, you don't, I think, really want to be into that many tech, because there is a sell-off going on in the tech sector. So next question. Should a pull-up of the Dow make the NASDAQ fall? Very, very hard to see tech going down. See, this is the problem here. Because we've been so trained, we never think that the tech could ever go down in value. That is just not true. It can't. So, Mark, I think you've got to be very careful investing in tech right now. I think you've got to go with the price of oil going above 70. That's the bellwether right now, and we are seeing a shift in the economy. Now, I know this. I know this is hard to swallow because, and I have too. I mean, last year I was making tons of money in tech, and I still have tech on my watch list. The growth stocks are really where I like to play. But right now, there's just a movement out of them, and so you got to figure out where the football is going to go, where the puck is going to go. Like I think it's what famous hockey player said. Anyways, you got to go where that puck is going, and right now it's going into some of the cyclicals, the mining stocks and the oil and gas. That's what you got to look at right now. I know that's I know that's not what you want to hear. I know that's not what you want to hear. Thoughts on LPRO, LPRO. Let's take a look at it. LPRO. Open Lending Corporation. Okay, so this is a finance earnings in one day. Not bad in terms of the relative strength. I'm really liking that. And they're up. So that's looking good. Lots of funds in it. This is looking pretty good. Nice cash flow. 130, 132. I do like the lending area. I absolutely do like the lending area right now because a lot of people are moving into this. So this looks very intriguing. This looks like potentially a very good one. Good checklist, excellent checklist. Ownership is good. And the industry sector 31. Yeah, I'd say this is I totally think this is buyable, but here's the problem. This stock is buyable. It's just that right now there's not a good entry point to this because it looks as if it's fallen below, and it has definitely the 40-day line. The 50-day line. I probably wouldn't buy it right now. I'd wait for a reversal. Now, what do I mean by a reversal? Here's what I mean by a reversal. You draw a line like this, and then if it moves above this line, then you possibly want to buy it. But right now you don't because it's still trending downwards. It needs to reverse higher. If this thing reverses higher, and by the way, you should probably not buy this one day in front of earnings. So right now, I think with this one, all you can do with this one really right now is basically is basically to watch list it. I think that's really kind of what you got to do. Now, what do I mean by watch list? Well, I don't. A good place to put these stocks that are on your watch list is Yahoo Finance. That's free, and set an alert if it goes above a certain price. It's fallen below the 50-day line. I typically like to trade off these lines, and right now, it's a watch list and not a buy, unfortunately. But I do appreciate the LPRO as I think it's an interesting stock and it might have some legs. Let's take a look at a stock that I think in the financials that might be a little bit better than that. And it's Cowen, COWN. This is an investment bank, and they've been doing pretty well. I think it's WN. Is that right? There we go, Cohen, and it's pulled back right above the line. So this is instead of using LPRO, I think that this one might be a better bet. It's up 5% today, or 1.05. This is called Cohen Incorporated. It's basically an investment banker. They're doing incredibly well. It's got a 92 relative strength, and it's a $35 stock. So, and it's pulled above the 10-day line. I do think that this one has legs and probably will go higher. 92 relative strength on it. This is the kind of stock I think you might want to look at. If you're looking in the finance in the finance area. So you might want to take a look at this one. And that's kind of what I would say. I think Cohen is potentially the kind of issue that you want to look at. COWN is the stock. It's not going to be, it's not going to take off for the moon like some of the tech stocks have, but it's solid, and it's in the finance area, and it's got 100% checklist. So this one is very strong. COWN is the symbol on it. And I'm not in it, but I'm looking possibly to open a position in it. I do think it's doing quite well. So instead of right now, it's a real stock pickers game. You gotta look to see which is the best opportunities, because it just isn't as easy as just buying the tech of the day, unfortunately, right now. So it's just one of those things. Next question. Stocks to buy now, question mark. Well, here's the thing, and that's a great question. I am concentrating my watch list in stocks that are basically in a little bit different area than I was concentrating them before. I'm concentrating more in the cyclical type of stocks than I was before. So let me see if I can give you a I can give you a list. Well, here's the thing. Let's see. Let me pull up my watch list. And this is available for everybody. From my small portfolio. And let's see what I have on my watch list. I did just update it. Let's see if I can pull it up here right now and give you kind of a look of where I am moving. All right. All right. So let's go over here and see if I can switch to that. Nope. Tab. There we go. There we go. So basically where I'm looking right now in these are stocks that I currently have in the small portfolio. These are the kind of stocks that I think you ought to be looking at. Halliburton, it's a oil service company. Rent-A-Center, that's also a good one as well. Ford, and then Granite Construction. And also on my watch list, I kind of want to show you some of the ones that I have on my watch list. If I can get this to, there we go. If I can get this to move over here. But some of the ones I have on my watch list are here. So let me see if I can. There we go. So on my watch list, I have some other ones I just put on. Vale, V-A-L-E. It just moved above a buy point. It's a mining company in South Africa. I mean, not in South America, excuse me, not South Africa. DCP Midwest Midstream. This is a pipeline company that I like. It's not quite into the buy zone yet, but it's there. Also, Diamondback Energy, FANG. And Marathon Petroleum. I like all of those right now, basically because of the movement away from some of the techs into some of the other ones. So that's kind of an idea there. All right, thoughts on J&J. Of course, this is everybody knows this is Johnson & Johnson. And of course, they are definitely in the hunt on the vaccine. Now, interestingly enough, it looks as if Pfizer is probably going to be the one that is more prominent in this, because they did not accept any government money when they developed their vaccine. So it looks as if they're going to be probably more profitable than Moderna or some of the other ones. Here's the thing about these companies. I mean, these have been around forever. I'm not really a total fan of J&J. It has fallen below the 50-day line, but it looks like it may reverse. Here's how I would buy J&J. I would buy it if it reverses above this line here that I've drawn. You see, this is the trend line. If it moves, if it moves above the trend line, it is up $1.30 today. So, would I buy this now? No, I would watch this one on J&J. So, I think that a lot of the part of the problem with J&J is that it's a very large company, and it just isn't It's got a 32 relative strength. So there's other better places that I think you're going to get a better pop on. So that's kind of my my take on it. All right, let's take a look at. I want to be okay. All right, well, thoughts on WMT, and of course, this is Walmart. Everybody knows that. Walmart has been lagging the market big time, and I want to show you this chart. This is kind of not a place I don't think you really want to be in. Is Walmart, and as you can see, it's moved lower. It's got a relative strength of 11, and it's fallen below a very key level, and that is the 200-day moving average. This is that black line here, and as you can see, the stock has fallen. It may be turning here, but not only is it below the this is not a good setup right now, because Walmart is below the 50-day moving average, is below the 200-day moving average, is below the 10-day moving average. So this thing is pulling back. So we don't want to buy Walmart at this level. We just don't. This is a bad chart, and so it's not buyable. I mean, it is buyable. You can buy it, but I think you won't. I think you won't have a good result, because it looks like it's going to pull back a little bit more. Buy more Ford or GM? Well, I personally like Ford better, and I do believe that. I know that it's boring. It's a boring company, and I started accumulating this about a month ago. But I do think that Ford has a very good chart right now. For right now, I think it has a very good chart. One of the great things about Ford is that they're totally benefiting from going into EVs. Their EV Mustang is starting to cut into sales for Tesla, if you can believe that. I mean, I couldn't believe it, but here I am, and I saw a few of them today driving in, and I couldn't believe it. So Ford is moving very heavily into the EV space. It's up today. Not a lot. I mean, but remember, this is a $12 stock. It's $12.75 for the stock. I really like it. I think that this could easily double in 6 months, easily. And I don't necessarily think that's the case with GM. I do like GM a lot. I was in GM, but I did sell it. I think GM is very strong. I think Mary Barra has a very good program list right now, and I was very critical of her for a long time. But I don't think I take back my stuff, because we're starting to see some results with GM. But for my money, Ford is probably your better bet. I think that buying Ford at $12 is not a bad idea, in my opinion. LAC, hold or sell. Let's look at LAC real quick here. LAC. Lithium America. You know what? I would sell this one. Sell it. Okay, and here's why I would sell this one. We've pulled below the 50-day line. This is a very key level for me. I don't like to hold stocks if they're moving in this direction towards the 200-day moving average. So I would sell this one. It's below its buy point at 16.97. So I think that it's probably a good time to sell it right now, based on this. And if it turns around, great, buy it back. But right now, I would sell it. Sell that one right now. I would sell it. All right. Let's see. What do you think about Q? Let's take a look at Q. All right. Q. And of course, why is that not wrong? No, I guess I have it wrong. I don't know. I don't know what to say about Q. Oh, about O. About O, is that right? Oh. Yeah, okay, Realty Income. Here's the thing. I don't like the area for Realty Income. Because I don't know if you know this, but there are many malls in this country are closing. I don't think Realty Income is a good place to be. Even though it is up today, it's below the 200-day line. I wouldn't buy it. I just wouldn't buy it. I just don't like to buy it unless it's reversing. I don't want to buy it. I don't see them as particularly Is that changing? Right now, realty is especially commercial realty is very, very troubled because there's so many. There's going to be because of the COVID thing. There's so many vacancies, and it's just the pricing power is going to not in the realty sector right now. So I would not be in it. I would not be in I went all cash. Very good. Well, it's good. I mean, I was all cash basically. Basically 2 weeks ago, I was all cash. I've been putting my pinky in there. I've been doing, controlled risk trades, mostly spreads, and then I've been shorting. To be honest, I've been shorting. So that's not a bad place to be, all cash. Because here's the thing: if you're in all cash, there will be opportunities, and they will happen. And by the way, I try to put out the opportunities that I'm taking advantage of, and you can easily do that by going to the by going to and getting the action trade alerts. So easy to do. All you have to do is go to subscribe. Is basically subscribe on YouTube to Dallas Trading Floor. And also, if you want the free action trade alerts, all you have to do is go to www.Dallas Trading Floor and put in your first and last name and an email address, and we send them out. And of course, they're all free, and you can cancel anytime you like. So there's really no risk. Also, with if you're on TikTok, it's easy to get on this action trade alerts. Just go to my profile, hit the link, and you'll see you'll see another sub menu, and then it just says first and last name, and you'll be right on the action trade alert. So that's a good way to go there for that as well. All right. Next question. For some reason, I'm having a little bit of issues with bandwidth again. And, it should be better than this, but it isn't. Okay. Here we go. What leisure stocks would you recommend? Thank you, Joseph. I really appreciate that. Here's one that I did a spread on. I really like this one. And I'm going to show you this one. I think this is well worth your look right now. It's basically HZO is the symbol on it. And it is a boat company. They make boats. Can you believe that? They can make boats. But I think this is tremendous. This is the number one stock, by the way, on the IBD 50. So this is one I highly recommend. It's HZO. And I did write a bull put spread on this one today. It's got a relative strength of 94. And you can see it's had some very nice volume coming into it there. So it's looking quite strong. It's not really, it doesn't really have a great place to buy it. The last true buy point was 33.80. It's currently trading a little bit above that at 51.42. But I do think that around 50, this might not be a bad this might not be a bad one to get into. It's got 100% on the checklist, and I really, really like this. This is one of the reasons I'm very interested in this one. So this is a leisure stock that I would recommend highly, at least for right now. I mean, things always change all the time, but but for this one, this is called Marine Max, MARINEMAX, and its symbol is HZO. So that's kind of a cool one. So let's see, put that. It's just not letting me. There we go. So this is the stock, Marine Max, symbol HZO. I do think that this one is a great leisure stock. A lot of people are buying boats. Also, Brunswick is good, but I like this Marine Max a little bit better. I really appreciate that comment. That's a very insightful comment. Thank you very much. Javier, let's see. Tech stocks, tech rocks, never sell. Okay, well, okay. Hey, believe me, in the long term, we're all dead. So I wish you the best luck. Tech stocks always will be great, but right now they're not moving into them. So I understand it's hard to change, hard to see things differently. Let's look at DM quickly. DM. Desktop Metal. Interesting. Okay, so this is a tech stock machine. No, it isn't. I guess it's okay. It's a holding company. I don't know anything about this company. I don't really like the chart, though. It's got a 65 rating. Ooh, 35 checklist. I think you want to probably avoid that one. I think that's probably a to avoid. Well, I have spent a whole hour of your time. I've wasted a whole hour of your time. If you'd like to get onto the action trade alerts, and it's super easy. All you have to do is go to www. Dallas Trading Floor and need the first and last name, of course, and that will get you in on the action trade alert. So I'll just put this up once more. And here it is, the address for Action Trade Alerts, www.dallastradingfloor.com. And if you're watching on TikTok, it's super easy. All you have to do is go to my profile, hit the link, and you'll be taken directly to a little page, just first and last name, and it's all free. And I will see you all tomorrow. Happy trading, and stay safe, and be careful right now. It's a good time to be mostly in cash right now. Because the conditions of the market have changed somewhat, and we are still in a correction. So be careful initiating new positions. I will see you tomorrow.